Hey there! Welcome to Real Estate Insights. Whether you're dreaming of buying your first home or just starting to think about it, you've come to the right place. Today, we're going to break down the step-by-step process for first-time homebuyers in Canada. Step 1, assess your finances. Before diving into the market, get a clear picture of your financial situation. Check your credit score, save for a down payment, and make sure you have a stable income. This is the foundation of your home buying journey. Step 2, get pre-approved for a mortgage. This is a critical step. Getting pre-approved helps you understand how much house you can afford, and it shows sellers that you're a serious buyer. Plus, it locks in your mortgage rate for up to 120 days. Step 3, start house hunting with a realtor. Having a realtor by your side can make all the difference. They know the market, can negotiate on your behalf, and will help you find a home that fits your needs and budget. Step 4, make an offer. When you find the right home, it's time to make an offer. Your offer should consider the market value and comparable sales in the area. Your realtor will help you with this. Step 5, home inspection and conditions. Once your offer is accepted, schedule a home inspection. Step 6, close the deal and get your keys. Congratulations! After all the paperwork, the keys to your new home are officially yours. Stay tuned for the next tip on hidden costs you might not expect when buying your first home. Now that you know the steps to buy a home, let's talk about those hidden costs you might not see coming. These costs can add up quickly, so it's important to budget for them. First, let's talk about land transfer tax. This is a tax you pay when the property changes hands, and it varies by province. It can be thousands of dollars, so make sure to factor that in. Next up, you'll need to cover lawyer fees for the legal paperwork, and of course, home inspection costs to ensure there are no surprises. Don't forget the appraisal fee. Lenders often require this to ensure the home is worth the loan amount. And if you're buying a condo, you'll also need a status certificate, which checks the financial health of the building. Other costs include title insurance to protect against any legal issues with the property and the cost of moving. On average, these extra costs can add 2 to 4% to the price of the home. Be sure to budget for them to avoid any last-minute surprises. Now that we've covered hidden costs, let's dive into why getting pre-approved for a mortgage is your first step in the home buying process. Pre-approval is a game changer when buying a home. Here's why it's so important. What is mortgage pre-approval? It's when a lender reviews your financial situation and gives you an estimate of how much they're willing to lend you. The best part? You'll know your budget up front, which helps you focus on homes you can actually afford. Why does it matter? First, it gives you a clear understanding of your budget. Without pre-approval, you might fall in love with a home that's outside your price range. Second, it locks in your interest rate for up to 120 days, protecting you from any sudden rate hikes. Plus, having pre-approval makes you a more competitive buyer. In a hot market, sellers want to know that you're financially prepared to close the deal quickly. In short, pre-approval saves you time, money, and frustration. Up next, we'll discuss the pros and cons of fixed rate versus variable rate mortgages. Let's talk about the two main types of mortgages in Canada: fixed rate and variable rate. Fixed rate mortgages are all about stability. With a fixed rate mortgage, your interest rate stays the same throughout the term of your mortgage, so you'll have predictable monthly payments. This is a great option if you like to know exactly what you're paying each month and want to avoid surprises. On the other hand, variable rate mortgages can change depending on the market. While the interest rate can go up, it can also go down, which means you could save money if rates drop. However, you'll need to be comfortable with some uncertainty in your monthly payments. The choice between these two types of mortgages comes down to your comfort with risk. If you're someone who likes predictability, a fixed-rate mortgage might be the way to go. But if you can handle a little risk, a variable mortgage might offer potential savings. Now that you know about mortgage types, let's dive into the next step in buying a home: the home inspection. Once you've made an offer and it's been accepted, it's time for the home inspection. This is one of the most important steps in the buying process because it could save you from future headaches. During the inspection, focus on these key areas: roof, check the age and condition; plumbing, look for leaks and water damage; electrical systems, make sure they're up to code and functioning properly; HVAC systems. Heating and cooling need to be in good condition. Foundation. Watch for cracks or signs of settling. Windows. Ensure they're energy efficient and free of cracks. Attic insulation. This impacts your home's energy efficiency. Mold or water damage. Any signs of this could lead to expensive repairs. While minor issues can often be fixed easily, major problems could be a deal breaker or give you room to negotiate the price down. Once you've nailed down the inspection details, let's move on to down payment requirements in Canada. When it comes to your down payment, understanding the rules is crucial. Here's the basic breakdown. For homes under $500,000, you need a minimum of 5% down. For homes priced between $500,000 and $1 million, the down payment is 10% on the portion above $500,000. For homes over $1 million, you'll need 20% down. If you put down less than 20%, you'll need CMHC insurance to protect the lender. The good news is that the premium for this insurance can be rolled into your mortgage. Understanding down payment requirements helps you prepare financially and avoid any surprises. Next, let's take a look at how the first-time homebuyer incentive works. The First-Time Homebuyer Incentive is a government program designed to help ease the financial burden of buying a home. Here's how it works. The government will provide 5 to 10% of your home's purchase price as a shared equity loan, which reduces your mortgage and your monthly payments. The best part is that you don't pay interest on the loan, but you do need to repay it when you sell the home or after 25 years. This program can be a huge help in lowering your monthly mortgage payments, but there are specific eligibility requirements, so make sure to check those out before applying. Want more first-time homebuyer tips? Keep watching. Up next, we'll explain what a real estate deposit is in Canada. Here's an important question. What exactly is a deposit in real estate and why is it so important? A deposit is a show of good faith that you're serious about buying a property. In Canada, the deposit is usually 3 to 5% of the purchase price, and it's due within 24 hours of your offer being accepted. This deposit is held in a trust account until closing, and it becomes part of your down payment. If everything goes smoothly, it's applied toward the final cost of your home. It's a simple process, but a very important one. Now that you know about deposits, let's talk about the offer process in Canada. The offer process in Canada can feel like a game of strategy, but it's pretty straightforward once you know the steps. Your offer will include the price you're willing to pay, the deposit amount, the closing date, any inclusions like appliances or furniture, conditions, financing, inspection, etc. Once the seller accepts your offer, the clock starts ticking on fulfilling the conditions. Once those are met, the deal is firm and the property is officially yours. And with that, we're ready to talk about the final step, the exciting closing day. Closing day is the day you've been waiting for. It's the moment your dream home officially becomes yours. On closing day, your lawyer will transfer the funds, register the property in your name, and release the keys. You'll also sign the final mortgage documents and take care of any property tax adjustments. Once everything's finalized, the house is yours and you're ready to move in. If you found these tips helpful, be sure to like, share, and follow this page for more real estate insights. Thanks for watching and good luck on your home buying journey.